All right, from AOL and the Huffington Post, a $350 million deal, to the oil driller Ensco buying rival Pride International. It was a true merger Monday. Now, for more on what's driving the deals, we want to bring in Nancy Havens-Hasty. She's the president of Havens Advisors. I never even used your full name. No. Nancy, it's great to have you with us. You've spent 16 years at Bear Stearns. Now you're, of course, an expert in mergers and acquisitions. Today, pretty good day, huh?
A very good day, yes.
You liked what was happening. You liked the Ensco-Pride International deal.
I do. I think it's really, really interesting. The company is basically becoming a worldwide company. The deal makes an enormous amount of sense. There is very little to no overlap. And, sorry.
Go ahead. I'm going to hold it for you. You speak.
There is very little overlap in the two companies, and as a result, there probably aren't any antitrust problems. The whole deal makes a lot of sense, and I always like deals that are sensible.
All right, so you like the deals that are sensible. Now, another deal that happened today, this had to do with Danaher announcing that it's buying Beckman Coulter, and then you say that there's a connection in a way between this deal and the Massey deal. It has to do with things that happened in the past. We know that Beckman Coulter got hit because the Food and Drug Administration had sent them a letter saying you were advertising or you were pushing some of your heart test analysis, but the machinery, the letter, the description was not really what we thought that you were going to be telling the public, and as a result, the stock fell dramatically. Some of their divisions were not performing, and the previous quarterly results, the CEO left, and they put the company basically up for sale.
Right. Beckman and Massey both had some form of problems. With Massey, it was a mine disaster, followed by the MSHA making all sorts of problems for them, putting 3 of their mines out of 13 mines total on a POV list, which for all practical purposes, POV, it just means a forbidden list.
Okay.
And for all practical purposes, no operator of a POV mine can ever operate that mine again. So here they had a major portion of their assets that could no longer be operated under their auspices. So the board clearly felt that they had to do something. They had to sell themselves. There really were no alternatives. The president, Blankenship, was not so similarly inclined, and Blankenship resigned, and then the way was free for Massey to be sold, and that's what happened.
All right, so you have a situation where companies are taking advantage of problems that other companies have.
Right. Troponin was slightly different. I mean, they had a problem that was solvable, but during that time that their stock price was down, they got some expressions of interest, and as a result of that,
there were some private equity firms that showed that they were interested,
right?
Well,
they were rumored that Blackstone and Apollo were interested, but we don't actually know who was exactly the one who sparked the process. But at any rate, Danaher came in with a very big price at 83.5. Most people were expecting something like a mid-70s price. And the deal got inked. It's going to be immediately accretive to Danaher this year to the tune of 5 or 10 cents, which is quite unusual. And next year, even more accretive.
Well, and Danaher, I think on the call, talked about how they're going to be helping with the Chinese distribution of some of Beckman Coulter's analysis and reagent systems in China, particularly.
Right. This is another deal where there's virtually no overlap, virtually no antitrust issues, and that's very good. So they both can utilize each other's strengths and gain revenue thereby.
Now, as an expert in mergers and acquisitions, you could almost make a whole case study on Danaher and its acquisitive nature, because this is a company that is built. I mean, if anybody actually goes to a gasoline pump and tries to pump gas into their car, they're using a Danaher product. The Gibralco gasoline pumps is part of their portfolio. Is this going to continue? I mean, are more companies going to be sort of adding pieces to their portfolio, do you think, over the next, let's say, 2 quarters?
Well, I mean, as all 3 deals today were $7 billion deals. We're sort of getting to the medium-sized deals. Last year was a deal of billion-dollar deals. Now we're getting into the high single-digit bidding kind of deals. So I think what's happening is there's a massive amount of cash on corporate balance sheets, the highest it's ever been. There is no return on that cash. It's a much less risky deal. to get a new product by buying a new company than it is to build a new factory. It's that simple. It's just a lower risk alternative to using your cash. So that's why all these corporations are saying, oh golly, I like that product. I think it should be part of our offering, and going after companies that offer those specific products.
Well, we announced in Bloomberg earlier this afternoon, Big Lots may be putting itself up for sale as well.
Right.
So it seems as though this is a characteristic that is taking over in the marketplace.
Right, and the market has gone up enough that target prices are interesting to the targets. The target prices have been interesting to the acquirers for a couple of years.
But now they get to use not only the cash, but also maybe some portion of stock as well.
Right, but the target prices were low in the view of the target's eyes, and now having been, with the stock market having advanced as much as it has, the targets are also much more interesting in selling than they were maybe 6 months ago.
So I get the feeling that perhaps we're going to be seeing a lot more merger Mondays to come.
Absolutely.
Well, we're always looking forward to have you give us the insight and the lowdown on what's going on in the world of mergers and acquisitions. I want to thank you very much.
Well, thank you, Pimm.
Nancy Havens from Havens Advisors. Right. Appreciate it.